Welcome to the XFO Intelligence Podcast channel, Market Pulse Series. Today we dive into a crucial topic, the Great Disconnect, navigating the collision of liquidity, AI ambition, and consumer reality in 2026. As we move through the middle of 2026, the Greater China economic landscape presents a profound paradox. On the surface, things appear to be improving. The People's Bank of China has introduced sweeping capital account reforms. Foreign holdings of domestic assets have passed the $1 trillion mark, and geopolitical risks have eased significantly following the reopening of the Strait of Hormuz. Oil price forecasts are down, but the market's reaction is anything but straightforward. While these macro improvements are notable, the Hang Seng Index is deep in a 7-day losing streak, and analysts fear a further 1,500-point correction. At the same time, mainland retail sales fell by 0.6% year-on-year in May, marking the first contraction since the pandemic. The era of revenge spending has come to an end. In response, corporate China is doubling down on artificial intelligence. Ant Group is investing 35 billion RMB into AI R&D for its new Bao AI agent, and HKT is giving away 80 billion AI tokens to 5G subscribers. So how do we reconcile these aggressive policy moves, geopolitical calm, and bold AI ambitions with a falling stock market and weak consumer demand? The answer is that we're facing a structural growth and confidence disconnect. This is not a cyclical downturn. The problem isn't a lack of capital or innovation. It's a mismatch between liquidity, timing, and value realization. Let's break this down. First, there's the liquidity illusion and what we call the transmission bottleneck. Many believe that the PBOC's reforms mean the market is simply undervaluing the sheer liquidity in the system. But the real issue is that this liquidity isn't reaching the real economy. The wealth effect is breaking. Households are paying down debt, saving more, and shifting to discounted platforms. So flooding the market with capital doesn't translate into real economic activity. The 7-day market decline is investors recognizing that reality. Financial liquidity can't replace real cash flow. Second, we're witnessing a Darwinian moment for AI. Companies are realizing that the AI boom is splitting in two. On one side, there are scale-driven strategies, massive free token giveaways to retain users. On the other side, utility-driven strategies, focused AI tools that deliver immediate, measurable benefits, like Ant Group's AI agent automating wealth management. With consumers under pressure, generic AI won't command loyalty. The winners will be those delivering micro-utility, direct savings, cost reductions, and tangible gains for households or SMEs. Companies that cling to vanity metrics and frill AI giveaways will face a brutal market reckoning. Third, we have the resonance trap. When policymakers oscillate between stimulus and caution, and corporations flip between AI spending and cost-cutting, the mixed signals amplify volatility. The market is locked in this loop, and it's eroding confidence. The key is steadfastness. Policymakers need a predictable fiscal roadmap, and corporations need firm AI milestones tied to real economic returns. Finally, the path forward lies in micro-bridges. Policymakers can't depend only on financial liquidity. They need fiscal velocity, targeted vouchers or tax breaks to directly energize mid-peer households. Corporate leaders need to judge AI success by wallet share protection. How much are they saving consumers or boosting SME revenues? Investors should shift from macro bets to micro alpha. Look for companies with clear, quantifiable AI ROI. In conclusion, the growth and confidence disconnect of 2026 isn't a collapse. It's the friction of a structural transition. By acknowledging the bottlenecks, demanding rigorous economics from AI, and building micro-solutions, we can bridge the gap. The recovery won't be universal. It will be championed by those who master these micro-bridges. Thank you for listening to this episode of the Market Pulse series. If you enjoyed it, please like, share, and subscribe to the channel. For feedback or more information about our new Thought Leadership on Demand service, email xfointelligence@gmail.com. Disclaimer: the views and opinions expressed in this podcast are for informational purposes only and do not constitute financial or investment advice. Always conduct your own research. Stay tuned for the next episode of Market Pulse.